Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Market Outlook for Futures, where we take a look at our big six markets in the industry, and we want to keep an eye on what's going on so we can make a game plan for tomorrow's trading. You never want to have a day that you are unprepared for market movement, so that's the whole point of what we're doing. Now, before we start diving into all the different charts and everything, make sure to swing on over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. That will sign you up for the Nightly Outlook newsletter. We'll send you these videos direct to your inbox so you never have to worry about missing them, and they will always show up right on time so that you don't have to worry about, hey, what do I do for tomorrow? I don't know. Trying to make a plan tomorrow morning, not the best thing in the world. So make sure to have those sent to your inbox, and along with that, right on the website, underneath all of those in the blog section here, every single morning we post our live trade room morning prep levels, and these are the big levels that we're keeping an eye on for our level traders going into that day's trading. So let's jump on in here. Gold, starting off, we've got the gold, we've got the Bund, we've got the bonds, as well as crude oil, the Nasdaq, and the S&P. And starting off with the Bund going into the European session, this is going to be a common theme among a lot of different ones, is simply that we have a big weekend gap that hasn't been filled yet. The Bund, the FGBL, had a gap down, and we really haven't come back to it, right? They tried, they came close, found a little double top there, and then since have faded back lower. Now, very sturdy, obvious range that's been put in here between 163.75 to 94. It seems to be about the average extremes. That said, though, the extreme is obviously the highs and the lows. But notice what happened when it comes down to those areas. Came up to the highs, trapped above, put in a little mid-peak, formed a little mid-peak trap, and then another bigger one came down to the downside, put in a mid-peak trap, and a twin reversal off of the bottom. So there's a lot of back and forth going on around these range highs and lows, and it's certainly not an area that I want to play with if we're in the middle. So because we are in a slight bear trend, right, and slight is even being generous, we have the high right here, and since then technically this is going lower, but we are making lower lows and we're making higher highs. We're all over the place right now. So it's a very weak bearish bias, but all things considered, this is a range. We're looking to buy low, we're looking to sell high, and we're looking to stay the heck out of the middle as long as possible. Now, one big thing that I do want to keep an eye on is if we can get a breakout to the upside here, get a move up into that 164.06, find it where it rattles around for a little while, and then can push down. It might even find a little head fake. We see that very often on the weekend gaps. So 164.06 is the major area of resistance. If we push back down to the lows, anywhere between 163.75 down to 163.68 or so is going to be the major support. So I'm just looking to fade both sides of the range. Over on gold, very nice drop lower, and again, a weekend gap up at 1234.7 in this case. They almost filled it on the very first candle of the day, but they could not get the job done before finding a big chunk of selling pressure right back down. So with that selling pressure to the downside, they tried to come back up, right? They failed through a high. They tried to come up again, couldn't even get to the same high, and it just gave up the ghost and slammed lower. So just a beautiful dive down on gold, but it took a while, right? This was not something that happened, in 5 minutes. This took several hours for this to occur before the breakdown. Once it finally happened, though, it moved nice and quick. So the overall momentum here is we have a weekend gap that's unfilled and a big bear move down that was likely exhaustive, right? We had a nice bear channel working down. It blew right through the bottom of it, and that's not very sustainable movement. We saw that in a couple cases today, and this is a great example of it as well. Big blast through the bottom, unsustainable movement after a huge bear trend working its way lower, biggest candle of the day and no follow through. Something's a little wrong here, right? Something's up. And then we see this big reversal to the upside, and they haven't really stopped. Now, we are arguably pausing for a little while. You could even say that we have a little wedge that's forming inside here. And that's a fair assessment. We have a nice rally higher. We have a good 3 push. Arguably, you could break that up into 5 or 6 pushes. And now we're forming a little wedge. A lot of times when you have a spike like this, especially one this strong, and you go into a wedge, the final breakout can sometimes be the high of the move. That might be all we have for the buyers before pushing back down. Now, that said, we do still have the weekend gap above us at 1234.7. I would love to see them get up to that area to find selling pressure, but again, they might not be able to. There's a lot of bearish pressure here, and if we start seeing the sellers push back again and drop below this wedge, it may be a bottom edge failure for them to push back down to the lows. One big caveat to that, before getting back down to the major lows, we have monthly support to deal with at 1223. So we might get hung up there a little bit. But at the moment, until the sellers show up, we have to be thinking buy side, even if it doesn't look that great up here. Until the sellers show up to the party, yeah, let them kind of fist fight each other out and, well, jump on when they've proven themselves. And then over on the bonds, another weekend gap unfilled at 152 even. We cycled between the highs up at 151.28 down to the lows at 151. Very small range today on the bonds, okay? We're dealing with not even a full point, right? A full point would be 151 to 152. We only had 28 ticks of movement today, okay? So let that sink in a little bit. Now, it is the bonds. They pay $31 a tick, so you can definitely make a good chunk of change trading a 28-tick daily range, but it is much more difficult when the volume and volatility is this small. Keep that in mind when you're looking at going forward, because we might just expect more of this. We might not go anywhere, and you have to adjust the way that you trade. Smaller targets, smaller stops may be necessary for this week. But we do have an unfilled gap. We have several highs being put in here, right? We opened at that 151.27 area, retested it for a double top, retested with another micro double top, forming a quad top off that open. Big pressure off of that area. Now, sellers did start driving back down, and arguably this is a fairly decent bear channel working lower. And if we transpose this to the other side, this is where the problems start to come in, right? Now, it's not by much, and keep in mind with this small of a range, sometimes this happens just because of the way that the ticks round, but they didn't test the bottom. And that's a big clue, because if this is a bear trend that's going to continue, they should be able to go to the bottom of bear channel, right? It makes sense. That's where sellers want to take profit, and they couldn't make it. So the fact that the sellers missed that low test, that caused the buyers to get a little more anxious for the move up. Now, coincidentally, this is coming off of 151. This is a gargantuan buy support area we were talking about in the room today, and sure enough, it tapped it, and it never looked back. Came all the way back up to the morning range highs. So great pickup on that morning volatility and that huge volume in the room today. And if you were able to trade it, you did some pretty good work, considering that was only a 28 tick range on the day. So what I'm looking for at the moment is kind of treating this two-sided. We're getting a lot of buy moves, we're getting a lot of sell moves. It's very back and forth. So arguably you can buy low and you can look to sell high and treat it very similarly to a range. But at the moment, the buyers own the market. So I'm looking to buy the pullbacks and let the sellers kind of get out of the way for a little while, and then start looking to sell on a retest of that 27, 151, 27 up to that 152. See if we can find some selling pressure in there to shove the market back lower. So at the moment, looking for buy side only, because they are the ones that have the proof. Finally, over on crude, back into the energy sector here. Now, crude oil had quite the fall from grace. We went, really sideways for the first little bit. Small little weekend gap right there. They did close that weekend gap, and they just went around all over the place until right around 3 o'clock, where Europe opened up and it hammered down. Now, that big slam lower they pushed into weekend and monthly support at 53.31. We found a reversal off of that big blast higher with absolutely no follow through. Once again, seen as exhaustion, and the sellers really kicked that thing down right back against them and shoved all of those buyers out of the way. Now, with that big drop to the downside, it's obvious that we need to be looking to be sellers. It has a sell bias. Any correction higher likely is just going to get sold anyway. So any counter trend breakout, whether they try to break out to the upside by only a little bit or by a lot, there's much more probability that the sellers are going to sell into it. Now, the shorter term area to sell into is 52.99. Nice little area. It's at the top of a range. We just put in a double top up there. Seeing a little head fake above this might be a nice place to look to sell in. If it starts breaking out a little bit further, though, maybe they want to kick this off in a type of bull channel. I would love to see them get into that 53.20 to 23 area right after that big drop, right? They had the big slam lower. They paused for a little while and then continued. I want to see if the sellers can defend their original position. So that's kind of what we're looking for here on crude, is just simply, hey, sellers, we're back. Do you want to take it again? So looking to sell, but preferably at a better price. Over on the Nasdaq, beautiful run to the upside, very strong bullish momentum, and arguably even a multi-tiered channel working its way higher. You can see that level of support came in several times inside here. So when you have this kind of situation, a lot of times what's going to happen is the market will put in this big spike higher, they'll pull back. This is the same thing that we were talking about on crude oil a second ago. They'll pull back and they'll show some signs of failure at the bottom edge. So you can see those signs of failure between 52.43 half up to 46 and a quarter or so. And the last time they were there, they never looked back, right? They rocket shipped outside of it after only one test. They push down, slam it higher, and they never even turn back around to say, see ya. They're gone, right? So with that amount of bullish pressure, that's where we started thinking, okay, well, if it can come back to that location, that's where the buyers, if they're still interested, should be coming in to defend pretty aggressively. So 52.43.5 up to 46.25 is a major area that I would love to see tested for potential buying, especially with a slight little overshoot at the highs. Chances are we're going to get a correction. Now, the problem is we might only correct for a little bit. We can start seeing some signs of inventory being put in down here where they try to break down, it fails, comes right back up again. It's showing that, this area may be the low of a range. That might be all the farther we get is around 52.5. So you got to keep that in mind, but overall, I would love to see a poke into this area and support to push it right back up towards the highs. And then finally on the S&P, very similar situation, but a little more overzealousness here. We have the same bull channel, nice bullishness running its way through, still staying above that 5,300 area, big things in terms of the upside, but we got much more overzealous here on the top of the channel. Now, on the Nasdaq, they only did a little bit, right? Here, though, we had a good 3 candles form outside of it before they even started pulling back. So this does appear as though it may be a flag, right? Get a flag and then a breakout for more continuation. The problem with that is, though, if it does continue, there's not really much room. If it does go back up to the highs, you're assuming sellers are immediately at the highs because we've overdone ourselves already. There's no more buyers left to push it through the high for another big blowout. They're all stuck back here hoping that it comes back to the high so they can take their profit, right? So if it comes back to the high, I'm looking to sell that area for an initial bounce and then maybe get that pullback deeper that we're looking for around 21.75 down to 21. The same kind of situation as the Nasdaq, but just a little more clue of bearishness here on the S&P. So that's going to do it for this one. Hopefully you had a good day of trading. It was definitely nice, refreshing to see that volatility continue into today, even if it was a little bit slow for the breakout movement. Once it happened, that's where you got that breath of fresh air. So hopefully you had a good day of trading. If you didn't, make sure to learn from it. If you did, don't get your head too big. It's hard to fit out those doors when you're a little too confident. So that's going to do it for this one. Hopefully you found it useful. As always, you can send me an email, jbrink@slingshotfutures.com, with any of those questions that you may have. So that's it for this one. As we always say, make a plan, trade the plan, follow those rules, and you will be A-OK. Until tomorrow, have a good one.